Good afternoon, and welcome everyone to this first webinar of the Invest 2030 series. The series was conceived by AlphaMundi Group in collaboration with Phenix Capital. It is a free educational series for financial industry professionals and asset managers, mostly of the Swiss market, to inspire you in showcasing products that are investable and that can help you allocate or shift capital to the SDGs in respect with your investment policies and strategies across asset classes, geographies, and sectors. Today, we're very fortunate to have a number of fund managers who will showcase their funds to us. But before we get started with the fund presentations, I just wanted to give a little bit of background. Nora, if we can move to the next slide, please. So first of all, this is an educational series. And from a formal perspective, we do not recommend, we have not due diligenced any of the funds, and we encourage all of the participants, if they are inspired to do so, to run their own due diligence on these products or any other related products for SDG investment purposes. Next slide, please. In a nutshell, what we're trying to address, and this is why we're affiliated with Building Bridges, is the supply and demand mismatch. Namely, that institutional investors are seeking to shift capital to SDG financing, but are sometimes struggling to find seasoned managers or quality products that they can fit into existing investment policies and allocation strategies. And so that's the purpose of Invest 2030, is to reduce the perception gap and hopefully to trigger more financing for the SDGs, with an emphasis, of course, on impact opportunities. Impact investing we define as profitable risk-adjusted funds or investment solutions that also enable you to measure the economic, social, and environmental impact of your investment. Essentially, we are using the SDG framework. That's a Sustainable Development Goals framework. There are 17 SDGs. There's 169 targets that define these SDGs, and below these targets, you have a number of specific indicators, which are the IRIS plus indicators. And so as an investor, whether you're a pension fund, a bank, a family office, or even an endowed foundation, you can choose to make investments that help you achieve your financial targets while also increasingly subscribing to the 2030 agenda, right? By 2030, we hope that all of the SDGs will be fully financed and we will be able to trigger a transition to a sustainable economy worldwide, as well as to a more equal society. Next slide, please. Today, the first webinar of the Invest 2030 series is dedicated to inequality and gender equality in particular. This is related to Sustainable Finance Geneva's Gender Lens Initiative for Switzerland, which we abbreviate as GLIS. And the GLIS aims to enhance Switzerland's contribution to SDG number 5, SDG number 5 being gender equality and women autonomy, by facilitating research and generating data for the business case for a gender lens approach, by contributing to the emergence of industry benchmarks and common standards and definitions to avoid green or gender washing, by showcasing financial innovation, as we'll do today with a number of products, and in general building awareness about the different methods that Swiss investment managers can contribute to SDG 5. Next slide, please. Now, the GLIS has formed an investment solutions committee to help us screen investment products and make sure that their gender impact thesis is credible, right? And we're very fortunate to be able to rely on the insights of David Uzoki from the International Institute for Sustainable Development in Geneva, Maria Afonseca-Vogt from the Women in Sustainable Finance Association in Zurich, myself, Rosa San Giorgio from Pictet Wealth Management in Geneva, and Olga Miller, formerly at UBS and now independent at Smart Purse in the UK. So these are all experts that have come from mainstream institutions in the past and that are now dedicating part or all of their time to sustainable investment solutions and the development of the marketplace in Switzerland for SDG financing. Next. AlphaMundi Group, in a nutshell, is a group domiciled in Geneva that's been existing for now 12 years, dedicated to impact investing. We manage a couple of funds, a number of co-investment mandates. We have a nonprofit foundation as well in Washington, D.C., that is financed by government agencies such as USAID, the Canadians, and Sweden. And over the course of the last 12 years, we've demonstrated together with many of our industry peers that it is possible to invest for impact in a profitable way that is attractive on a risk-adjusted basis, and that it is possible also to measure quite precisely your economic, social, and environmental impact. Of course, all this is an emerging practice because impact investing itself is roughly 10 years old and was built on the premise of microfinance, when microfinance was mainstreamed and commercialized. And we're now seeing an evolution between sustainable finance that was usually limited to listed securities and impact investing that was usually limited to the private markets, and in particular private equity and private debt, right? So today, impact investing really is about multiple investment strategies that span multiple asset classes. Roughly 50% of the assets in impact investing are invested in Europe and the US, because we also here in our countries need to transition to a sustainable economy and a more equal society. And so I just want to clarify that impact investing is no longer just a purview of emerging markets and is no longer limited only to private equity or private debt. And there's a merger happening between sustainable finance in the classical ESG SRI sense and impact investing. And we're seeing that also in the regulations such as the European Union's sustainable finance disclosure requirements and many other industry standards that are now slowly being integrated in the mainstream fiduciary duty definition across Europe and the US. Next. Phenix Capital, as I mentioned, is a for-profit company in the Netherlands. It's built a very successful track record of assessing impact funds. It is the source of many of the leading industry surveys on an annual basis, including the collaboration with the Global Impact Investing Network and the World Bank's IFC. They also have advisory services for institutional investors. They haven't been very active so far in the Swiss market, and we are grateful to them for providing these proprietary insights on a gratuitous and courtesy basis to AlphaMundi for Swiss market building purposes. Next. Okay, we come to the first presentation of an impact fund. So what's going to happen is we'll have 3 presentations, one after the other, of these impact funds, and then we'll have the time for Q&A. During the presentations, please feel free to add your questions to the Q&A function online, and we will try to address as many of your questions as possible after the 3 presentations. And at the end of this webinar, which will be in about 15 minutes time, we will also present the next steps for both Invest 2030 and for the GLIS initiative. So without further ado, I cede the stage to Theriault from Cross-Border Impact Ventures. Please go ahead.
Hi, Tim. Thank you very much for inviting me to present to this wonderful group this morning and for the introduction. Today, I'll tell you a little bit about our firm, Cross-Border Impact Ventures, and the Women's and Children's Health Technology Fund. Our firm is a new firm, and we've been launched to create a fund that was really addressing health outcomes inequalities impacting women, children, and adolescents, both in high-income markets, including North America and Europe, but also in emerging markets. And how we approach the issue is really by focusing on highly scalable health technology companies that address some of the common issues that have been ignored or haven't been addressed for one reason or another over the past few decades in the market. What we've noted as we were looking to this market is that only 1% of venture capital dollars are really allocated towards women's health, and for children's health is very minimal, and it's not a statistic we could even find. So it's really quite an underinvested sector. And for those in the room who are investors, you'll recognize that when we look at underinvested sectors, it does create opportunities for outside returns. And from an impact point of view, we believe it's quite important as well. Our approach is really we source deals in markets that we know that have track records of success in terms of venture capital investing. And then we formed a partnership with Grand Challenges Canada, which is an organization that's been around for over 10 years and that has mobilized, together with its own investment, nearly $1 billion Canadian towards health innovations in over 100 countries. So we leverage that network to achieve the impact while focusing our efforts both on supporting that impact, but also on the commercialization of the technologies that we invest in. In terms of gender approach, it includes both, as I was saying, the investment thesis of the fund, which is centrally focused on addressing gaps in health for women, for children, for adolescents. But also we do look through the companies that we invest for their own gender practices as well. And the approach that we've used there, we're quite lucky because our partner Grand Challenges Canada has already been doing this for nearly a decade. So we draw on that expertise. And so our gender lens approach is really not a screening tool, but rather we look to meet companies where they are. And so many of the companies in our pipeline are actually companies that have already achieved gender diversity, and we help them to reach their next opportunity, their next level of diversity and inclusion. And for those that are earlier on their journey, we provide them a lot of support to diversify their boards, their executive teams, their employees, and provide better work environments for the women that they employ. In terms of our impact mandate, we've been quite specific with our fund. We're targeting 500,000 lives saved and 10 million lives improved in low and middle income countries, with at least 30% of the target being achieved in Africa. And yeah, that's it for a brief introduction. I look forward to conversations with some of the groups that are attending today.
Thank you very much, Annie. So we'll move directly to the Beacon Fund. Shuyin, the floor is yours.
Thank you, Tim. Hello, everyone, and greetings from Ho Chi Minh City, Vietnam. But I'd also like to thank the AlphaMundi team for giving us the opportunity to present the Beacon Fund today. Maybe I'll first give a quick introduction about myself. So I'm a partner at Patamar Capital, which is one of the most active impact investing firms in Southeast Asia. And last year, we launched a new gender lens fund called the Beacon Fund on the Patamar platform. I'm Australian, as you might have been able to identify from my accent, but I'm of Asian heritage and have been living in Asia for more than a decade and for more than 8 years in Vietnam. So I've spent my entire time in Vietnam doing early stage investments, and it's been a great privilege to watch the rise of the entrepreneurial ecosystem here. Before entering the investment world, I was working in management consulting at a Bain & Company and development consulting at TechnoServe in both Australia as well as India. So apart from leading Patamar's Vietnam office, I also lead our gender lens investing strategy. And a key part of that was launching one of the first gender lens investing funds in Southeast Asia through our partnership with Australia's Investing in Women program. And while we would consider all of the funds on the Patamar platform gender lens funds, the product I'm about to tell you about today is our second fund, whose underlying principle is gender and women's economic empowerment. Next slide, please. So one of the things that we noticed in our time investing in Southeast Asia is this very stark paradox. On the one hand, we saw, a very persistent gender financing gap. So I think in Southeast Asia, we were seeing that only around 10 to 20% of women-owned, women-led businesses are getting access to adequate and appropriate financing. And we didn't see a marked improvement in this over the decade or so we've been investing in the region. At that same time, though, there's been a real explosion in private equity and venture capital activity in Southeast Asia. And I've seen this really personally in Vietnam, where there's a lot of VC dollars chasing a pretty limited number of deals. And as we got thinking about this paradox and why the female entrepreneurs we knew weren't getting funded, we saw that there was this classic missing middle problem. So there was a significant portion of companies which were too small for private equity, didn't necessarily fit the exponential growth profile of or demanded by venture capital, and which were too big for microfinance, as well as some of the emerging fintech or P2P lenders in the region. Well, what about banks, you might say? Actually, so the SME banking sector in Southeast Asia, particularly emerging Southeast Asia, is quite underdeveloped and often has very high collateralization requirements, opaque processes, or relies on you having existing relationships at the bank. And the Beacon Fund really emerged out of this experience and our observations here. So we invest in cash flow positive, moderate growth businesses where we see a very high proportion of female entrepreneurs. Time and time again, we've seen that women gravitate to businesses with healthy unit economics and where profits can really be channeled back into organic growth. And for these types of businesses, debt tends to be an appropriate investment instrument, and that's our focus at the Beacon Fund. So essentially, we offer debt investments of $500,000 to $2 million US, and we see that as really serving the missing middle of businesses. We also have a COVID-19 resilience facility through the support of Investing in Women, which allows us to offer slightly smaller loans of a few $100,000. Our focus markets are those that we know very well, so Vietnam, Indonesia, and the Philippines, and opportunistically other markets in Southeast Asia. And one of the core pillars of our strategy is to really have a local on-the-ground team in each of our core markets. So in terms of fundraising, since launching the fund last year, we've raised almost half of our initial target of $50 million from both institutional and individual investors. Next slide. So we're really applying a gender lens at all levels, so both in terms of what we're investing in, who is doing the investing, and also how we're doing the investing. So in terms of the what, we are investing in women-owned, women-led businesses, and then also selectively in businesses which primarily and intentionally target women and girls. The who, so we're very focused on building a diverse team with a large number of female investment decision makers. And finally, in terms of the how, we're really glad to say that over the past 4 years, with the support of the Criterion Institute and Investing in Women, we've developed and implemented a gender analysis tool, which is really embedded in our investment due diligence process. I know we're short of time, but I'm happy to share more in the Q&A, but this essentially goes beyond a check the box or counting women to really understanding women's roles and experiences in particular sectors, business models, and companies. And beyond that, we want to show that there's another path to entrepreneurial and investing success beyond venture capital and private equity, which is really the most commonly known pathway in our markets. I'll wrap up my presentation there and happy to take questions later in the Q&A session. Back to you, Tim.
Thank you so much, Shuyin. And my thanks to the first two speakers because you've been so efficient with time and right on target. Very much appreciated. So our next presenter is Ayesha Khanna from Care-SheTrades. Ayesha, the floor is yours.
Thank you. I will try to keep up the trend of my colleagues. It's great to be part of the Invest 2030 series with AlphaMundi and Phenix Capital and Building Bridges, and with my colleagues to showcase ways to achieve gender impact and generate financial returns. I'm Ayesha Khanna. I'm the Managing Director of Care-SheTrades, a for-profit subsidiary of the global international development nonprofit Care. My colleague Jagnupati is also with me from Bamboo Capital. She's calling in from Singapore. But Care's work for 75 years has been about addressing poverty, and over the last several decades has centered around gender equality and women's economic empowerment. So this fund is an extension of that work that leverages Care's on-the-ground gender experts, and in partnership with a seasoned impact fund manager, Bamboo Capital, and a UN agency, the International Trade Center. Next slide, please. So we're raising a $75 million impact fund focused on gender justice. We launched last year. It's a blended finance growth stage fund focused on businesses in South and Southeast Asia that are ready to take on capital to grow and access traditional financing. And as they scale their impact, they're scaling and impacting the livelihoods of women as their businesses thrive. 15 million will be first loss capital. So we're creating a 1-to-4 ratio for the senior tranche that will be made up of institutional investors. We've built a very unique partnership. So Care has a presence in 100 countries, has teams on the ground that have been working for decades on gender equality. So Care's focus on the fund is on the social impact and providing the technical assistance to the portfolio businesses. Bamboo Capital is our formal fund manager. They've been working in emerging markets for over 13 years and have a successful track record, have been making investments in the region. The International Trade Center AlphaMundi initiative is a UN agency, and they provide deep trade expertise and a platform that connects millions of female businesses owners to markets. USAID has invested, Care has committed 10 million to ensure the success of the fund, and we've raised an addition 2 million. Next slide, please. So I joined Care Enterprises a year ago. I have worked across sectors. The themes in my career have been innovation, gender equality, and global impact. I started my career building healthcare centers in India. So for the past 15 years, I've really been focused on the intersection of market-based approaches and social impact and putting traditional capital to work to achieve social outcomes. We've designed our impact framework based on best practices in gender lens investing and had deep input from the Bamboo's impact team and from Care gender experts working on the ground around the world. Our framework is aligned with the IRIS taxonomy and the 2X gender challenge framework that's been adopted by 15 governments around the world that's focused on SDG 5, achieving gender equality. Our disciplined methodology goes beyond just counting women to truly valuing women by impacting the work and the economic conditions for women workers, for women consumers, and for supply chain business owners. So we really are looking at impact across the entire value chain. Next slide, please, Nora. Thank you. So just a few notes about our investment approach. We're providing flexible capital, both debt and equity, with an average of 3 million or less ticket size per deal, where there currently is a market gap between seed stage and access to traditional capital, so the missing middle. Our portfolio is going to focus on businesses addressing the needs of underserved markets in healthcare, fintech, agriculture, water and energy, and e-commerce, all of which Bamboo has a track record of investing in. We have a rigorous process of due diligence. This is where our in-country teams and deep market expertise pays off in South and Southeast Asia. We're seeing many growing businesses that have been operating for a few years. They have 300,000 or more in revenue, and they're able to put that capital to work that are aligned around our fund values to put inclusive practices in place, from safe workplace policies to equal pay to goods and services that impact women's economic conditions. This is just good business. And so we are excited about the robust pipeline that we've been pre-screening in South and Southeast Asia. This is a blended capital structure, so it offers attractive protection for senior investors. The senior tranche will receive their principal back first, and then also receive the target net 7.5% IRR prior to the first loss investors. So our senior investors will be risk protected. Our first loss investors are committed to the mission and excited about contributing catalytic capital to drive this gender impact. In addition, 50% of the fund's carried interest is tied to social impact targets, with 50% tied to financial performance. So with that, I might end there, and really looking forward to further dialogue and answering your questions.
Thank you very much. That was also a very comprehensive and to the point presentation. Appreciate it. So first of all, the first question on the Q&A is, are we going to receive the presentations that are now being shared on screen? The answer is yes. Of course, we will email the presentations to all the registered participants. We will also put those presentations on the GLIS, the Gender Lens webpage of Sustainable Finance Geneva. And we will make the presentation available on the LinkedIn page of Invest 2030. And so the first question that we're getting now is, what are the criteria on investing on women-led enterprises? And I'll give our three speakers just a minute to think about that question. I want to reference the 2X challenge. So 2X is an association of development finance institutions that was really one of the first to move significant capital into gender lens funds. And for that purpose, they established a number of criteria regarding what constitutes a gender lens fund. And in fact, it's likely that they'll be working on a fund label by the end of this year. And so typically what constitutes gender lens is if a company is led in part by women, right? At least 30% of the leadership of a company should be composed of women. That's one of the criteria. We also look at whether companies are impacting clients that are majority women, or if the products and services of the company have been designed with women and girls in mind, right? So that's another aspect that we look at. And of course, another criteria is whether the companies are owned by women, right? So looking at the capital structure side of things. There are other criteria, of course, but we don't have time to go into all of them. But very broadly, that would help you as an investor determine pretty quickly whether a fund is genuine in its gender thesis or not. Now I'll cede, again, I'll pass the word to our three fund managers. I don't know who wants to go first on that question.
I'll dive in. It's Ayesha from the Care-SheTrades Impact Fund. Our criteria is we're looking to make investments in early stage businesses that have products in the market, they have proof of concept, they have a minimum of 300,000 in revenue up to $1 million. We're also looking for businesses that are committed to our thesis. So are interested in incorporating inclusive business practices focused on gender equality. They don't need to be majority owned by women, or women owned, women controlled or led, but most will be. And the reason that we're a little flexible in the ownership is because our invested companies must either have a large number of women workers that they can impact, or a large number of women consumers, or a large number of women in the supply chain that are business owners. So we're really looking to have a ripple effect with a large number of workers or consumers or supply chain business owners, but we'll have a majority of businesses that will be women owned, certainly, as part of our portfolio.
I can go next. So our framework for gender lens investing has 3 layers. So the first is we rate the company's gender practices according to Grand Challenges Canada, our partners framework, which is a framework that rates organizations based on a 0, 1, 2, 3 level, 3 being the best. And in this particular circumstance, our gender criteria 3 is only available if you address a women's need through your business in terms of your service, whereas a gender rating of 2 would be for a highly diverse, highly inclusive business that has another type of product. That framework also allows us to identify certain strengths and weaknesses, and it's not designed to be a screen-in, but rather a statement of measurement of the business that we're looking at. The second layer is we use the 2X challenge criteria, again, as a rating, not so much as a screen-in, screen-out. So we look to the product being a fund that's specifically structured to address women's and children's health needs. The product criteria is typically always met by our companies. And then we look through other layers again to rate and to look to really evaluate where the company's strengths and weaknesses are. And then we overlay our own consultative approach to that, using the data that we've collected and really work to set milestones of the next level of gender inclusion for the company. And that's really been an approach educated by Grand Challenges Canada, who've been doing this for a long time. And we consider ourselves as a fund, really that part of our mission is to improve gender equality of the companies we invest in, as well as ensuring that new health products are available to women all over the world.
Fantastic, thank you. I don't know, Shuyin, if you want to add anything or if we'll move to the next questions.
Yeah, I think the other speakers answered it very comprehensively, so maybe let's get to some of the other questions.
Okay, excellent. So we have 3 types of questions. There's half a dozen of them now. One of them is on return and liquidity. So obviously a key concern for any institutional investor. The second type of questions are on measuring impact and what is the methodology used and how do you determine impact in relation to cultural differences or sensitivities and social relations. And the third one perhaps has a more clear link on market building. What could be the role of governments in driving the agenda to shift capital to women-owned and women-led companies? So let's start with the first one. If you could, all 3 of you, address, the return and liquidity of the funds expected versus any benchmark that you think is available or comparable, and also perhaps the ticket size for investors. And I'll add one more, which is if you can mention the types of investors you've already had commit to your fund. I think that could be helpful too. Let's start. So maybe Annie and then Shuyin and then Ayesha. We'll just follow the order of presentations.
Okay, yeah. Our fund is a venture fund in health technology, so we're targeting market return for the category. Our fund, like Ayesha's fund, has a blended finance structure to encourage larger investors to come to the table, because we do realize we're doing something a little new and perhaps outside of comfort zones as opposed to extra risk. And to put some numbers on it, funds like ours at the Series B generally will target double digit, something in the range of 20% IRR. Over a 10-year period. In terms of liquidity, it is a completely illiquid asset class. So we expect to put out the capital over a 5-year period and monetize over a following 5-year period. I believe that was the whole question. Let me know if I missed anything.
Great. So
Ayesha? Or Shuyin, sorry, Shuyin, go ahead.
Sorry, okay. Yeah, so at the Beacon Fund, I guess, yeah, so in terms of returns, to tackle that question, benchmarks, so we would benchmark ourselves against other private debt funds, impact private debt funds in the market. That means that we're targeting a return in the mid-single digits range. As for our existing investor base, it ranges from high net worth individuals, but also we have some institutional commitments from some, I guess, some very large foundations, both in Asia as well as in developed markets. And maybe I think one thing to note in our case is our fund structure. So we've actually structured Beacon as an open-ended vehicle, which is incorporated in Singapore. Why the open-ended piece, which I guess is a bit different to most of the 10-year funds that we're seeing in the market. So I think we made the explicit decision to structure Beacon as an open-ended vehicle in line with our long-term mission. Also, our underlying assets are primarily debt, which does provide predictable investment reflows. and that enables the vehicle to become profitable at a pretty early stage and have kind of sustainable profitability ourselves, much like the businesses that we invest in. So I think because of this, we have returns to investors through both redemptions as well as dividends. We open up for redemptions from year 5 and then also pay out dividends on a profit sharing basis out of the cash flows or cash flows from our debt investments. I think I've covered all parts of the question as well. So back to you, Tim.
Brilliant. Thank you, Shuyin. Ayesha, please.
Yes, so we're an equity fund. We're deploying both debt and equity to deliver a market-adjusted return of 7.5% IRR. We are also illiquid asset class, so 5 to 7 years, and then over the 10-year fund. Our investors are institutional investors, USAID, and high net worth individuals. And our average ticket size is about 3 million. I don't know, Jugnu Pakti has joined me from Bamboo Capital. Jugnu, I don't know if you can chime in this format or if there's anything else that you might add. She may not be able to, Tim, be heard.
Yeah, that's fine. She can also leave her comments in the Q&A if she wants.
Oh, terrific.
And all the participants will see it. So thank you for answering this risk-adjusted return profile and types of investors. We move now to the impact. And there's a lot of questions about which methodology you use to measure your impact and to measure the reduction of inequality that your fund intends to finance. Perhaps we can start there.
I'll go first, and I realize I was missing a part. So in terms of the investors in our fund, it includes institutional investors. So we have a DFI providing concessionary capital, and the others are impact fund of funds, high net worth individuals, family offices from Asia, Europe, and North America, as well as endowments. So just to address that piece of the question. In terms of the impact measurement, for us, we are leveraging our partner Grand Challenges Canada to use the really state-of-the-art methods. So we measure lives impacted or lives touched, however folks want to define that. So basically the end users of the health technologies that we finance. We then, from that larger pool of lives impacted, calculate down the lives improved. So meaning those individuals that use the product that otherwise would not have had access to any solution, or that now are receiving a better health technology as a result of our investment. So meaning that, for example, if it's an improved contraceptive, they have now avoided certain side effects. And we know scientifically the prevalence of side effects for the investments that we make. And then from that statistic, we also calculate whose lives were saved. For example, in certain markets, pregnancy leads to mortality. And so we know that if we avoided a certain level of pregnancy by converting non-users of long-active contraceptive, we've helped contribute to a life saved. Grand Challenges Canada helps us with this analysis. For example, on our first investment, we created an impact model that had 21 versions. So that's the kind of rigor that we put to impact forecasting and impact measurements. We're definitely hoping to reduce the number of versions in the future, but that gives them an indication to how much we care about these metrics to investors.
Great, thanks, Shuyin.
Great. So in our case, I mean, we've drawn very heavily upon the IRIS Plus metrics as well as the impact management project to really craft our impact measurement and management strategy. So we collect a number of metrics at the fund level, kind of more fund level strategic metrics. So these would include, for example, the number of women-owned and women-led businesses that we would have invested in, the number of women directly impacted through the fund's portfolio companies, and the amount of capital we've mobilized ourselves, and as well as through our co-investors and follow-on investors into women-owned, women-led businesses. And of course, I mean, this is alongside the financial metrics of the fund as well. At the portfolio company level, we also go much deeper, looking at a set of financial, operational, gender, and impact metrics for each portfolio company, which is very key and an upfront part of our due diligence process and what we would set with each entrepreneur as we enter each investment. And I think part of doing this is to really build the data set, right? I think we talked a bit earlier about building the data set around gender lens investing, right? So I think for us, collecting this data at both the fund and then the portfolio company level is really critical to building this field. One maybe quirk or addition that we've made to our impact management and measurement process is to add a piece around I guess, customer advocacy, or how satisfied the entrepreneurs that we interact with are with us as an investor or fund manager, even those who might not have received funding. We see that as important because we'd love to see that female entrepreneurs feel more empowered during the investing process, which can be daunting, and there's a lot of ingrained biases that do affect that process and power dynamics as well. So I think that's in one small way, I think a way we look at reducing inequalities, apart from I guess the more obvious ways through the work of the portfolio companies themselves.
Great, thanks, Shuyin. Ayesha.
So we align, of course, with ESG requirements, with the new EU regulations, and then, of course, have a framework that goes deep on gender impact, like my colleagues and other funds. We developed this framework based on the IRIS taxonomy. It's the best standard, and also to align with the 2X gender challenge, Tim, that you described. That's an adopted framework by governments around the world. And we based our framework with that overall alignment with best practice on the experience that Care gender experts have had on the ground for decades, and based on Bamboo Capital's track record of 14 years. So brought together financial metrics along with gender metrics as part of our integrated framework. It's quite comprehensive, our framework, because it focuses on women workers and the workplace. So pay policies, inclusive policies around sexual harassment and safety in the workplace, management representation of women. So there's a set of metrics around the workplace. There's also a set of metrics around the consumers and female consumers. What are the consumer feedback loops? Are the goods and services that are being delivered by our businesses in our portfolio actually helping support those women, improve the economic conditions of themselves and their families? So there's a set of metrics around consumers, and then there's a set of metrics around the supply chain. As these businesses grow, are they growing their supply chains of more women business owners? And are these practices rippling through the supply chain and those women-owned businesses? We tailor our impact that dashboard based on each of the business models. So if it's a business that has a lot of women workers, food in the agriculture, for example, then the metrics that we are focused on is focused on the workers. If it's a business like an e-commerce platform that has a number of consumers, then those metrics are tied, the lever of impact, a lever of change is tied to the consumers. So we really are tailoring our impact framework based on the business models, measuring a baseline, and then over the course of those 5 to 7 years, tracking their progress with Care gender experts providing technical assistance, walking side by side with those businesses over those 5 to 7 year investment term.
That's great, thanks, Ayesha. Now we're going to go into the set of questions that revolve around market building, the role of governments, and a few more. But before we go there, there's a question about the tension between impact potential, finance potential. This is a question I think all impact managers are used to. And I would like to answer just in the interest of time. So first of all, there's a report called the Impact Benchmark, published by Cambridge Associates, that compared the returns of private equity funds in emerging markets, and they compared traditional private equity funds, mainstream private equity funds, to impact private equity funds from 1990 to 2010, right? They looked at the data over 20 years. And the difference between the two was 1% net per year, right? So mainstream private equity funds investing in emerging markets delivered 8% return per year, in dollars, and impact funds delivered 7% per year in dollars, right? So just like we have now proof that in the listed equity and listed bond space, there is no more significant difference between mainstream and ESG performance. In the impact space, focus on emerging markets and on the private side of things, we have also demonstrated now that there is no significant trade-off between mainstream strategies and impact strategies. There is just one small group of impact investors that by design provide concessionary finance to help build new markets, right? They represent about 25% of impact investors according to the annual GIN survey. And so by design, they choose to have lower returns in order to have a bigger impact in new markets. But by and large, there is no trade-off on the financial side if you don't want to trade off. That's what I'll say about this. There is a question about collaborating with microfinance institutions or commercial banks for capital access for women-led MSMEs. I'll let you guys answer that if you want. But let's move to the broader question of market building. What is the role of governments in driving the agenda and shifting capital to women-owned or women-led companies? What are the education tools that are required for men and women in the gender-led space? And are public-private initiatives existing today or to facilitate the emergence of gender-based businesses? So if you could in turn tackle these three key questions in the next 5 minutes, that'd be brilliant. Annie.
Okay. Yeah, so we think about things a little bit differently, if you will, than perhaps my colleagues on the panel, because we're really working with companies that are, for the most part, already global or aiming to be global. So technical assistance is sometimes a little harsher for us because we're dealing with groups that have investors that are from Silicon Valley and other places like that, and so we can be a little bit more direct when we say, look, your board is not reasonable, as opposed to providing support in certain circumstances. Where we think of public-private partnerships is in a bit of a different angle, and it's really about spreading the kinds of technologies that we're looking to fund into emerging markets. And what we're doing for that, we formed a partnership with the Health Innovation Exchange of the UNAIDS to bring together a group of investors that think like us, that are from various global markets, some that invest mostly in high-income markets and some that invest mostly in emerging markets, but all a group of investors that are interested in really moving the needle materially in terms of health outcomes in emerging markets. And so what we've done is we've pulled together this coalition. We're bringing together a group of at least 5 African governments and 5 regions of India that are willing to provide these little sandboxes, so to speak, where a new contraceptive can be demonstrated, where a new telemedicine or diagnostic platform can be demonstrated, so that all of the eyes of the other countries and regions that are part of those tests can be there to adopt technologies that are demonstrated to be useful and need. And it's really a bi-directional collaboration we're aiming to do, where essentially what we're doing is getting the pull a little bit from them, but also showing them things that they may not be aware of. Like, today there's some AI-based platforms that can diagnose skin conditions down to the region of Botswana that we're working in. And the government of Botswana may not be aware that this is possible to that level of specificity. And so we show them opportunity, we engage with them and hope that they will, be supportive of adoption in their markets to really drive health outcomes.
Thank you, Shuyin.
Great. Yeah, I guess maybe one trend that I reflect on is the significant increase in blended finance style structures in gender lens investing. I think we've seen a tremendous takeoff of that in recent years. And I think actually all of the three funds being presented on this call do use some element of blended finance. And, I think governments and DFIs have been active players, right, in that regard. I think there's I think maybe one important thing to clarify is that this doesn't mean that investing in women is more risky. However, I think we would all have said, noticed that there are certain risk perceptions, right, associated with our investment theses, which are relatively new in the market. And I think that's why some form of blended finance structure could be helpful in some cases to alleviate some of these risk perceptions which do exist. And I think we've seen, in these funds on this call, right, there's many ways you can do that, whether it's through first floor structures or guarantees, right? But I think we've all seen I think government actors be pretty active in that regard. And I would say governments are actually getting a lot more innovative in partnering with fund managers, private fund managers. And I think for us, we had our first experience of that about 5 years ago now, when we worked with the Australian government on the Investing in Women program, and it was the first time that they had actually partnered with a for-profit fund manager. So there were interesting learnings on both sides. But I think it's a trend we're definitely seeing in the impact investing and gender lens investing space more broadly.
Thanks, Shuyin.
Just to add to that, I think as we're all saying, public-private initiatives is critical, and gender is a value add, a focus on gender. We're talking about businesses that have equal pay, that have transparent data, that have a clear understanding of how to connect with their consumers. That's good business. And so I think there's a recognition that adopting a gender lens is actually investing in nimble, resilient, scalable businesses that is good business. And so I think it is exciting to see the sector understand that. And the fact that 15 governments have come together as part of this coalition to deploy $4.3 billion in gender lens investing speaks to the opportunity for gender lens investment. I guess I would just add, USAID that's invested in our fund, they did so because they wanted to provide catalytic capital. So as Shuyin said, part of this blended finance model, they wanted to be catalytic to help us attract more traditional commercial capital. So that's a role certainly that governments can play, and then governments can also come in at the senior tranche and achieve both financial returns for their stakeholders and impact that complements and supplements their international development and impact objectives. So I think it's an exciting time, and I think it's critical, and we're seeing governments play a bigger role, and they are an essential player in the impact investment space to really go bold and big and to step out early and to showcase that we can achieve both deep gender outcomes and financial returns, and that's a win-win.
Maybe pick up and add to that, to what Ayesha was just saying with respect to blended finance. I also really strongly believe in this, and for the investors in the room, to just get a sense of the potential of that, and perhaps there's some government stakeholders in the room as well. In Canada, around 2007 timeframe, venture capital was really a dead asset class. It wasn't growing. And we came up with this program led by Government of Canada. It was one of the industry focused groups that was called VCAP, the Venture Capital Action Plan. That program invested $350 million in a concessionary layer for fund of funds that were going to invest in tech companies. And they structured it really smart. They didn't put too much restrictions on the fund of funds and on the ultimate fund. So they didn't say thou shall invest in Canadian companies only. They just said build good venture funds, because if we have a solid venture business in Canada, this will create innovation. And then they doubled down in a few years later with a $450 million program, and recently announced another $450 million program. Each of these programs have led to at least 4x the capital being brought in from the private sector, from pension funds, from high net worth individuals, family offices. So in total, it's billions of dollars now in Canada being invested in venture. We've not done the same in Canada for gender investing. So some of my colleagues are on the line, and certainly not for global funds like ours, but we're hopeful that, you know, in the next iteration, governments around the world will think that way. And that's what will result in a more diverse venture capital sector or investment sector more generally, and more women receiving funding, because women lead great businesses. And I think that's an important goal.
Fantastic insights. Thank you, Annie, Shuyin, and Ayesha, for your comprehensive presentations and very sharp answers. Much appreciated. To Annie's point on blended finance for gender, 2X is working on a facility that will catalyze, incubate, accelerate funds, gender lens funds. And the Swiss government is also working on the Swiss Impact Investing Initiative that will be announced at Building Bridges in November. For the same purpose, but with a broader remit. So blended finance is definitely on the up and up, and its results so far are very encouraging in terms of market building. In the time that we have left, there's just one technical question that I would ask each of the fund managers to answer either in the Q&A or in the chat, which is, what is the minimum holding period for investors investing in your fund? There's another question related to how to embed impact or a gender approach in portfolio companies. I'll answer in the interest of time. You can look online under the AlphaMundi Foundation website, the G-Search program with values for women. This is a program that's been now in effect for 2 years across more than 20 companies in emerging markets with great results. And the results are documented in partnership with the University of Michigan. So I'll refer you to that, to these findings and these instruments on that question. If we can move to the next slide of the presentation, please. We have a couple of minutes left. I just wanted to point out that private equity impact funds or private debt impact funds are not the only way to invest for gender. If you prefer to invest on the liquid space, there are a number of ETFs that have a gender lens approach. Of course, it's a different level of impact. I like to point that out, but it is also an easy way for you to shift a lot of capital towards gender lens investing, right? So you have here a list of ETFs that were sent to the GLIS ISCO, the Investment Solutions Committee. We have not reviewed them in detail, but most of them are from very established providers, and we encourage you to take a look at those as well. In the next slide. We also have gender lens bonds. There's an increasing range of bonds that allow you to invest for gender lens purposes, and they're issued as much by very large quoted companies, listed companies, as well as by more specialized impact boutiques. Again, we encourage you to take a look at these bonds and instruments to complement the range of financial instruments you can integrate in your portfolio for gender lens purposes. Next slide, please. So what are the next steps? For the Gender Lens Initiative in Switzerland, we have a webinar on the 8th of June in collaboration with UNCTAD, the IFC, the UNDP, and the ITC on international public standards and initiatives for gender lens investing. We're working on a number of other webinars for the fall. You can find our monthly gender lens insights in the SFG newsletter that is available on the webpage and on their LinkedIn page. We are working on 3 types of Swiss market research in collaboration with our academic research committee. These research efforts will be launched in the fall, and they focus on the impact of investment products on SDG 5. They focus as well on the gender governance of Swiss financial institutions, and finally on women as capital owners and investors. So we're very excited about these 3 novel research efforts in the Swiss market, and you'll hear more about it in the fall and at Building Bridges. We are, of course, planning a gender lens session at Building Bridges, and we will be giving, Sustainable Finance Geneva will be attributing a prize for gender impact to one of the 12 finalists selected by the UNDP in the GSIF process. That is a process that has selected 12 out of more than 100 companies in emerging markets for their high level of impact in terms of SDGs. So that's for the GLIS. For Invest 2030, you see on screen the next webinar dates. The next one will be on the 24th of June on SDG 7 and 13. And if you have any questions, please reach out to us either through LinkedIn, through SFG, or directly to AlphaMundi. Again, our purpose here is to help you understand the options that you have available today to invest for the SDGs, to shift capital across asset classes, in your preferred theme and preferred sector. So anything we can do to help you in the spirit of building bridges, we'll be happy to do so. Thank you all so much for your presence and participation today. My thanks to the managers, to the ISCO, and you will find again the summary of this webinar by Monday evening on the relevant web pages. Thanks everyone. Goodbye.